Hello, fellow traders on YouTube. This is the first video that I'm making to share how I am learning ICT trading concepts, smart money concepts, and I'm going to share my analysis with you of Euro Aussie and how this setup unfolded and what I think is likely to happen next. Again, this is not trade advice. I'm using a demo account, so I cannot, and you especially cannot make or lose money here. This channel is for learning and entertainment purposes only, and I'm not a licensed financial advisor. I'm not responsible for any losses or gains. Trade at your own risk. Now, with that out of the way, let's get to business. As the week started here, this is Monday and Tuesday, and of course yesterday was Wednesday, and this is today's trading as it unfolds. So the previous week we had this price action here, which was a consolidation at the beginning. So the last few days of the week were a consolidation, and this is a consolidation right here. All right, this is a consolidation, and right here we leave the consolidation. We accumulate here, we accumulate, and we distribute all the shorts here this week. So the end of last week into the end of the week before last week ended in consolidation right here, and at the beginning of last week we got our first expansion, and then retracement, and another expansion, creating here relative equal highs, and then retracing again and closing the week here. So as this current week started, we had relative equal highs here as buy side liquidity, and relative equal lows here as sell side liquidity, and eventually the lows of the initial consolidation. For those who understand ICT concepts, this is the market maker sell model, and we anticipate price to clear this consolidation. Now, as the week started here, this is Monday's trading. Normally, there is no clear setup as we love to see it during this day. One could have traded this over block right here. There is a retracement into it. That's a buy. But typically this day is not good for trading. We will elect to trade only after one side of the marketplace has been engaged. Like here, we knew at the beginning of the week that there is buy side liquidity over here, and we're very happy to see that Tuesday's trading tapped into that buy side liquidity and then reversed, leaving an inversion fair value gap right here. So since we had an inversion fair value gap on Wednesday, we had the day started here, and we traded back up into that inversion fair value gap, and immediately broke lower, creating a break in market structure right here on this time frame. This is our break in market structure, and then it's a signal that we are going to seek lower prices, and it's coupled with a fair value gap. So this right here is a mitigation block coupled with a fair value gap. So technically, as price reached this level, This was an opportunity offered to smart money to put on more shorts. This is smart money reversal, and this here would be low risk short for us if we wanted to trade this. I did not trade this. I am seeing it in hindsight, but this is how I am learning so that I can be able to see it in the future. Foresight is built on hindsight. First, use hindsight and train your brain to anticipate, to build anticipatory analytical skills. So this is the purpose of this channel. And here, this is our hypothetical entry right here. And if I'm using this tool that YouTube is TradingView provided to us, there are two ways of entering here. One is the institutional order flow entry drill right here, or we use consequent encroachment, which is not always quite likely to happen. One thing to remember though is that it is happening during London Open. This is 3 a.m. New York time. London opened here at 2 a.m. and at 3 a.m. we traded back into this bearish fair value gap. So it's a logical level to take a short, and for us this would have been our one shot one kill, and stop loss would go here above the weekly high. Why? Because there is this fair value gap that will act as resistance, and also the opening price of this order block would offer resistance. And if that fails, we got consequent encroachment of no, not consequent encroachment, but medium threshold of the order block. Now, if that were to fail, then it would be okay for us to lose, to get taken out of the trade anyway, because if this level fails, we're likely to continue going higher. So it's good to just be out of the marketplace and not be trading at all, but to get out of the position at a smaller loss instead of incurring large losses. All right, and then if we enter there, where would we target for profits? Initially, this is where I would personally target, and from here to here, that is 1 to 4 risk reward ratio. This is perfect. This one trade per week, it is enough. And as we can see here, there is more offered, and I believe that we're likely to get all the way down here and clear this original consolidation. Now, this is market open right now. London just opened. It's 2:45, so very soon it will be 3 a.m. We may trade into this fair value gap right here and reverse. I believe that's highly unlikely, but that's something that can happen. So we are open to anything happening. Should that happen here, then we may trade back into this fair value gap before resuming going lower, seeking this sell side liquidity. Now, I personally believe that we are going to go lower, and I'm bearish, seeking lower prices here. Even though I remind you, this is not advice. Do not go out and take a trade based on this. Do your own analysis, make your own decisions, buy or sell depending on what you think the market is going to do, not what I say. Okay. All right. So this is a very beautiful price action. This looking at this, I feel very excited. It's just like Picasso looking at a mountain, a snow-capped mountain, and thinking of how he can painted on his canvas or is looking at some other beautiful object that he would like to paint. This is my beautiful object. I like price action. This is beautiful. I like how it is logically unfolding, and I'm going to continue to just record this and chronicle price action on a daily basis using either um, the majors or the crosses, depending on what is going on with the dollar index. Okay. All right. So today our analysis focused only on Euro Aussie, and I believe this is awesome. And I hope to continue building on my anticipatory skills so that I can see this before it happens and build the confidence to do whatever I want here with this price action. If I see this, then I will decide what I want to do. Right? This is it, fellows. Again, my name is Active Ammo, and my YouTube channel is Price Action Chronicles. I'm chronicling my journey of learning ICT smart money concepts and going from not funded, from a demo trader to a professional trader. So welcome, join the bandwagon, and let's grow together in this wonderful universe that ICT provided for us. This is just beautiful. I cannot express enough my joy of being able to see something like this unfolding in price action. This market maker sell model is perfect. This is the buy side of the curve, and this now is the sell side of the curve. And we are going to just note, continue to watch and see what unfolds once we get down here. So this sell side of the curve is also going to be set the stage for another buy model. So buy, sell, buy, sell. That's how the market unfolds. Right? The market is either in a buy model or a sell model, and if it is not doing either of those, just like here, it is in consolidation, and we cannot do anything. We can only wait for this. This is the beauty, the beautiful part of trading. I'm very, very excited for this, and I look forward to sharing more with you guys in the future. But please do not take this as trade advice. It's just some rando on YouTube being excited about price action, you know. All right, peace. I talk to you again. Good luck and good trading.